Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for a very volatile stock market day, at least, on this Monday, the 5th of February, 2018, just after 1:20 p.m. Central Standard Time. You're looking at very close to where the metal markets are going to settle. Copper had the best day. The other metals are under the selling pressure. The stock market down 400 more points. You're down 5% now in the S&P on the size of the break. And I wrote over the weekend that I expected a break to get to at least the 5 to 7% area. Could it extend beyond that? It could, but I'm not looking for a 10% break in the market. Doesn't mean it can't happen, and I could be very wrong. I just don't see it. What I'm seeing is the continuation. If the market's down today, I will say it already. Wouldn't surprise me if we try for Tuesday reversals to the upside. In the gold market, on a weekly chart of closes, the market is pulling back, and it's now at the current price, $1333.80 on the weekly charts. That just puts the market pretty unchanged for today. Not bad action, considering last week gold and silver got the heck beaten out of them as the stock markets fell. You can see on an April gold, the daily area chart of closes, still about unchanged today at the end of the day. You did change things. You put the market into a down thrust because you've gone from $13.68 down about $30, and settlement prices are under the 18-week average of closes. Therefore, when the market's under the 18-week, I immediately have a bearish bias, or under the 18-day average, a bearish bias. Depends which one and where you're at. When we look at the gold, we can see the overall correction, and you can see the market just waffling now between unchanged, then it goes black to unchanged there. Green is up one, down one. It's back and forth. You've got the swing lines bearish. You've got the pattern of lower highs, lower lows. That's bearish. The market is underneath the 18-day moving average of closes. That is bearish. So the trend is down, the bias is down since you're under that. In looking back, and it's always great to look back, as bullish as you might have been when you were up at these levels, I was saying, you know, it's a Bollinger Band. You got to be careful. You only stay 5% of the time over them. And I'd bet that you didn't think that when this next day happened and you're 1357, you were going to continue to follow down like this. And it's turned itself from this beautiful upthrust we had in 2018 into a market that's given up a good chunk of it. It's not back where it began from, which is lower in here in the low 1300s, but it's given back about $30 of the rally. Momentum-wise, what I like is the market's already oversold. You got a 27 reading. So what I think is happening is gold is breaking away from the willingness to just fall with the stock market. It's redigesting the inflation that we're all talking about out there, and maybe it's starting to say, you know, the one thing we haven't had is inflation. Maybe that's what we have to digest a bit more and figure out what to do. In the GLD ETF, it's like the futures, but in this one you got a higher high and a lower low. Where does it fight its battle? The 18-day moving average of closes. Momentum is pointing down, and it too is in oversold territory. So let's go to the GDX. It was down last Friday at the lower Bollinger Band after getting under the 100-day average, and it's had no bounce since then. It too is in a downtrend, but overextended. Don't know where it wants to stop, but if you sell under a Bollinger Band or buy over a Bollinger Band, more times than not, you are quickly sorry. I am not changing that teaching. I stay right with that. I would expect to see a lot of short covering actually taking place here. Not new buying, short covering. The gold-silver ratio giving up an awful lot as we take a look at the Feb gold versus the March silver. right back up here. Silver's not keeping up with the gold, and yes, we're approaching that historic 80 level again. In the silver, you can see how the market caved in. Lower highs, lower lows, and so far, no real bounce power. This market just, once it got under all this area here, this now becomes the resistance again. Again, by the way, we tried here to get over these key averages. We finally did it, and frankly, I thought the market was going to hold them much better than it did. So now the cave into the lower Bollinger Band, okay. Do I think there's a lot left on the downside? It's in a downtrend. It's oversold. I would be telling shorts, you're down to an objective. Probably it's a lighten up pattern. Not a buy, I can tell you that. In the copper market, let's take a look at what we had. On Friday, we have an outside day down with momentum just going sideways. Okay, the pattern is one of higher lows, higher highs, but you closed underneath the 18-day average. There's no buy, no sell. You got a big neutral market here because momentum is flat, bias is down, but the swing line is up. If you take out the highs of Friday, which were 324.40, the upper Bollinger Band says it's waiting, and that should be a resistance point. If it can drop down, 314.75 is the support. The market moves up today, gets up to 325.75, hits the upper Bollinger Band at 325.50, falls right back into that 18-day average of closes. But if it closes this manner, it still has a pattern of higher lows, higher highs. It's giving upside bias. More important to me than that, look at the sideways action that we're suddenly seeing in these bands. This market's starting to do this. It's like a pipe, and it's starting to wind in there. If the world's going to fire on 7 or 8 of its 8-cylinder engines, can copper be that far behind in demand? That's what traders are asking themselves. We'll see. In the platinum market, you've had a pattern of lower highs, lower lows. Today did nothing. You know, you were already in a downtrend. You're approaching an area that is not oversold, and with today, you are oversold. So I wouldn't be surprised now to see that the shorts are starting to pull in their positions. Oversold is oversold. What can I say? Resistance back at 10.0560. You have to clear all this area to neutralize the downtrend. I don't see anything that turns the trend up here, or in the palladium. I also see in the palladium that the market's got both numbers down by 20, both under it, in fact, today from the looks of it on the close, both under it from the looks of it on Friday, and both under it the day before. We have what's called an embedded reading. If the red line pops over 20, I look for more of a rally. As long as it doesn't, the bears are in control, and very possibly they'll try to take the market down to the 10, 20, 80 level. So it's one of those that you watch. It is a market that is the most bearish since it embedded to the downside. In the dollar index, nice little rally, no longer embedded readings, which often lead to price and the 18-day average trying to come together. I have no reason to think that won't happen, but which way are we going to go? You can see today you're at 89.82. The day before the average was 89.98. That's 16 points, and 98 to here is about 16 and a half, 17 points. So rule of thumb, that's all. Maybe you're moving 13 to 15 points a day. That could bring this number down to what? The 89.60s tomorrow. Interesting, not that far away from current price. That's how I do my pre-thinking on the market. As you can see, still falling in the stock indices, and the metals not doing what they did last week in jumping and falling out of bed with them. I'll be writing about all that for you. And what I do is in my market research, I try to really bring you up to date. I get people that write me on the YouTube, and I read them. And one of the gentlemen, of course, and I said this earlier in the grain area, wanted me to elaborate more on wheat. He thought I would. Well, I do in my writings, and I do in my morning research, but I don't for the general public. Come on, you're not paying anything for this. So I am not going to give you for free what the people that pay me get, and they get a lot of in-depth. How'd you like to start your day off? Here's a day trade. I'd do it here. I'd get out there. A trade longer term. Here's an option strategy you might want to think about. I do that in my research. This is very limited to what the overall trends of the market look like, where I think pros might do something one way or the other, but no trade recommendations are going to be made here. It's not that I don't want to give them. I'm barred from giving them. The government says I can do those only if I have a user ID and a password, and on YouTube and other social media, no. It's too hard to do that, so I just talk very general, and if I don't, I want to be slapped. I'm going to stay talking general, but I get very, very, very specific in the market research. How do you get it? Give us a call. You can go to our website. You can sign up for it right there as well. You can always click up here if you're watching me on YouTube. It'll take you to the forums or underneath us on many websites. It says click here for Ira's free information. I'm Ira Epstein. You have a great day. Let's see how deep the stock market break goes, and I'll talk to you in my end of the day financial report. May have a lot more to report there. Take care.